Okay, so we have the dollar index here, and you can see that we had a sleeper of a week for dollar. We opened up below our level we were looking for the week to come, last weekend's edition. So in other words, what we were expecting for dollar, we wanted to see it trade down below that. It opened below that, came up, closed in its gap, and then basically just chopped wood going sideways. It hasn't really done anything. Very, very frustrating, admittedly. This is what you get sometimes with trading, and you just really can't do anything with it except for grind through it. It doesn't mean that you can't take trades. Obviously, you saw me doing a lot of that recently, and it just requires you to do a lot more independent analysis on the individual pairs. So, because of this price action in here, we haven't gone up. We haven't gone through the mean threshold of this bearish order block, which is the up close candle here. That annotation, remember I said if we go through that, then I'm going to swing back to being bullish. Right now, everything maintains bearish on the dollar, and we're looking for the sell side liquidity pool here, and then the equal lows here, volume imbalance, and then if we get a really prolonged move on the downside, this would be our next intermediate term draw on liquidity, and then the fair value gap that exists here and volume imbalance there. Equal lows here, they could be something to consider as we get into December, but right now it just looks like we have to work out of this dealing range. Okay, and the dealing range is where we're at right now. The high on this candle 98.27, and the low looks like it formed it here 97.70 and a half. Yeah, 97.70 and a half is on Friday. So we're still inside this very tight dealing range, and I would venture to say it's probably going to go lower and allow the other foreign currencies to rally. But it depends on what Draghi says and how the central banks work with that and reprice. So this is one of those times where, unfortunately, you don't like me saying this, especially if you're new. I have to wait for more information. Okay, and if you're watching the old weekly reviews and midweek reviews, you'll hear me say that I'm waiting for more information. And once we get that, then we go right back in the cycle of knowing where it's going to go and start seeing price go to where I say it's going to go. Right now, I don't feel confident about going any more than I already have in regards to what has been spoken of on the dollar. Okay, there's no reason to go down into a lower time frame chart. It's just pointless at this point in time. It's no benefit whatsoever because everything that is germane to our analysis is shown here on the daily chart. Moving on into euro dollar, I mentioned last week we do not want to do anything with euro dollar, specifically speaking on Wednesday's midweek review. I said that we could possibly see a run up into this level here, close up some of this inefficiency on the downside. I think that may be the catalyst with Draghi speaking, or Draghi being the catalyst, I should say. That could be what we see. Now, if we don't, and we tear below this low here, the equal lows will be the target. Okay, so I don't know, and I don't know where we're at, what side. If I had a gun to my head, okay, it would be 60-40 long. Okay, 60% of me believes that it's going to go up here and close this in and leave the equal lows. Okay, and the only reason why I say that, and because I know you're probably saying, well, what makes you think that, Michael? See, I already know what you're going to ask me. I think it's going to go up here and not go down here, but I'm willing to accept being wrong. Okay, it doesn't happen a lot here, but if it does, that's okay because it's something I'm not going to be trading anyway. So it's why it's beneficial for me to tell you I don't like this pair at the moment, and we elected to focus on cable, and man, was it awesome. Okay, so what distinguishes this pair as a no touch, and if it's going to do anything just for street cred, I believe it's going to go up here. What makes me believe that? Look at the difference between the lows on cable here and the lows on Eurodollar. That's a correlated pair SMT divergence. Okay, and I'll say that again. Correlated pair, that means pairs that are closely correlated, like the Eurodollar and the British pound. they're closely correlated, they generally move in the same direction, which is opposed to the dollar index. So at major turns, or at long-term or intermediate term swings or market structure shifts, quarterly shifts, or just long-term reversals even, we want to see this element in price where we have relative equal lows, but cable went lower, but then it was able to power through, break a market structure, and start to reach for the upside premium arrays as we've been looking for. Eurodollar may leave these lows intact and then require the two speeches from Draghi next week to get the fires burning on this currency and wheels moving and turning, sending it higher. It just may be a sleeper right now, which is the reason why we haven't touched it. And you can see it's pretty much dead. Okay, it's basically doing the same thing the dollar index is doing, but just even less. So that's why I say that I think at the red line here, that's the upside draw, and it's more likely to occur than the downside run on the equal lows. If we run the equal lows down here, then I think that's going to be bullish for dollar, and we're not going to see those lower level discount arrays on the daily chart for the dollar index like here, here, and here. We're going to have to make an attempt to challenge this this high then. I don't believe that's going to happen, but if we do see the Eurodollar break those daily double lows here, then that's probably going to be very, very bullish for dollar. The reason why is because we've already done the damage in terms of intermarket relationships and intermarket analysis. Cable showing that there should be an overall justification for a weaker dollar, and it doesn't require Eurodollar to make that lower low like cable did here. Okay, so which is again the reason why we liked this pair more, because it's showing all the signatures that would allow us to trust institutional order flow. Now, even though we had a pretty lethargic week from this, daily charts perspective, we had an inside day here on Wednesday. I mentioned that would lead to a large range day. We got a little bit of movement here, and I said if we didn't get it on Thursday, we'd definitely get it Friday. Well, we had continuation. Okay, we had a continuation running up into the high that we were looking for, which was the initial objective. And go back and listen to, I'm going to pull a number out of the air, but it may not be yet. I think it's 24 minutes. Don't hold me to that. But whatever the cable portion was in Wednesday's video, just go back to that, okay? And then you'll hear me say that on Wednesday we were looking for the initial targets here. Then if we get through that and expand, we're going to trade it up and close in this fair value gap, which is a SIBI, sell side imbalance, buy side inefficiency, up to this candle's low, okay? We did, in fact, trade. Again, let me show you the high here on this candle. High being 25.78.5, and the high on Friday coming in at 25.82 and 3 pipettes. So we definitely went above it. Did exactly what we were looking for as a minimum objective, and we were looking to go long during Thursday and then Friday. I didn't mention it on Twitter, but you all know because of Wednesday's video, we were looking for this high to be taken. Okay, this pair I will drop down in the lower time frame, but I wanted you to really take a look at what we've done here. Okay, and we worked with elements from this particular chart, the daily chart, that led to me telling you what the daily bias would be for Thursday, and Friday it rolled over into our target, minimum target. Didn't get up in here, but the market really didn't do anything else anywhere else anyway, because the dollar's quiet, euro's quiet, and apparently they're waiting for Draghi to talk his speeches next week, and there you go. So the central bank will reprice based on the sentiment that his words will, which is already scripted in my opinion. Everything's already set in motion. I have to wait for the signatures to appear in chart form, and then I'll know what it is that we're going to be focusing on next week. So let's drop down into a hourly chart and take a look at this dirty dog here. All right, so here's the daily high. It's swept above, and that was done here during the London session. So it ran a previous high here. Beautiful setup. And crashed down. I believe that if we continue to erode, and I mentioned on Twitter, watch these lows here, because we set that up, or I set that up on Twitter to take your attention to this area here. Okay, and we explained on Wednesday why that was significant and why it was important. So if you didn't watch that video, go back and watch that, because it'll explain why this whole business here was a balanced price range. We traded down into it and we had a reaction. We traded down to it again. Okay, and I said, if we trade down below these lows over here, what's that low? The low is 24, 38, and 6 pipettes. 37 and 6 pipettes. We went 1 pip below it. That is a institutional order flow entry drill. This low here, okay, in other words, if we were looking at just this high to this low, that's a fair value gap. We trade down into it here, okay. The low is, again, 24.38, and the low on this candle is 24.37. So it's got to go below 24.37, this low here, to constitute an entry, which also would run this low here. The low comes in at 24.37 and 6 pipettes. This low comes in at 24.37 and 9 pipettes. So we went below this one. Remember, it's only got to touch this low here, or if this was lower, it would be touching that. That would be an area we could look for a long. Boom, it explodes to the upside. We have a fair value gap in here. This is an hourly chart. Trades down into it here. Boom, bullish order block, explodes to the upside. Now, again, on Twitter, I made it public. We were looking for the 125 big figure and the liquidity above that. Okay. Your job was to know, based on what I gave you on Wednesday, and go back and listen to the video again, this level here should have already been on your chart. That's what the price is going to reach for. I'm not going to be sharing or talking about everything I say in dialogue from the mentorship reviews on the weekly basis and on the midweek reviews. That's for you're paying for that. They aren't paying for that. But I like to throw them a bone every once in a while and get them stimulated for study, because not everybody can afford to be where you are right now. And I still care about their development, because that's the teacher in me. So this level was the draw on above 125.00 level. Okay. Price went up, hit it, and it does so in a market maker sell model. Before I drop down into a lower time frame, I just want you to know that this is the next draw on liquidity I'm looking for. And if we expand on the downside and say dollar explodes on the upside, this level here and some of this area over here, maybe 50% of this would be sufficient, about right here. That would be the next downside draw if dollar rallies. Okay, I think it could still sweep these lows here and still be bullish and allow dollar to go lower. Okay, we're at a crossroads where it can get really sloppy for a short period of time and then explode and go one-sided. I just don't know which side it's going to work off of first, and I need to wait. Again, if you're new here, it's going to be like, well, you should know better than this, ICT. Come on, I'm paying you. No, there's a couple times where, every quarter, every 3 months or so, there's going to be a period where I need more information. And it just so happens to be today we're doing a weekly review, and you're expecting me to tell you, okay, I'm pointing here, and now you shoot and try to hit that. We've already done that. Okay, we've already done that with this level up here, and it was fulfilled again for last week. This week, I am not confident at the moment right now as to know which side of the marketplace it's going to reach for, because it's fulfilled our weekly objective for last week, minimum. And it's fallen out of bed a little bit since it's done that. So I don't know what next week holds, and I have to wait and play it by ear. So if we lose ground in cable, just be mindful that these two equal lows and these two equal lows have a large pool of liquidity. Now, here's something that can also happen. Draghi says something and causes the market to have all kinds of wild price action. It could clear both of these, come down and fill in half of this, stop about right here, and then send it higher, which would be a remarkable long-term signal, because it would get rid of all of these short-term highs here. Okay, that would would be seeing this when it breaks down. They would see that as a long-term bearish top and continuing lower. If we get a reaction down here and climb back above the mean of this consolidation, okay, the equilibrium of the low to high, or actually it's this low because it's lower, this low and this high, draw a line through that, okay, and if we come down below these lows and trade back above that, wow, that is really, really bullish long term. And I will be all over cable for the rest of the year on the long side, building up a big position, because I believe that it would send us up into the 28s. So that's what I'm anticipating and forecasting if the scenario presents itself. But again, that's a lot of speculation, because I don't know what the central banks are going to do relative to the sentiment that is basically engineered by Draghi speaking next week. Okay. All right, so take a look at a 15-minute time frame, and everything is going to stay the same here, just going into a lower time frame. So you have a consolidation. We leave the consolidation and run up into our pool of liquidity, which is that old daily high. Price hits that, smart money reversal, break in market structure. Right there, that low is taken here. Here's your low, 25.54. And here is your low here, 25.54. Zero. It's 2 pips below. Is that all it takes, Michael? That's all it takes. 2 pipettes. The price runs back up. Fair value gap. Bearish order block. Sell off. Boom. Smart money reversal here. Low risk sell here. Redistribution. Sells off again. Sells off again. Fair value gap entry here. Sell off. I actually tweeted this real time. Asked you, what do you see? And that's exactly what was supposed to be seen in that. I was trying to draw your attention to that for folks that are in the mentorship. It doesn't matter if you missed it. It doesn't matter, because I do a whole lot of that stuff every week on Twitter. It goes over a lot of people's heads that are outside the mentorship. But when I do that, I'm prompting you all, not them so much, you. You know better. So the market reaches down into a pool of liquidity here. And again, you watch me do the run on liquidity below this low here. I was looking for a little bit deeper of a run to take out the 2440 level, which still, in my opinion, may be the near-term draw on Monday going into Tuesday. So just watch that going forward. And then I got stopped out on the remaining portion, which I also shared on Twitter today. So again, this is an exercise. It doesn't always pan out, but that's the point of practicing. You will go in and you engage price. Work on low resistance liquidity runs. Everything that you learn in month 1 content, that is the basis for you to be practicing every single day. Even if it's in hindsight, look at your charts and look at it from with the benefit of hindsight, obviously, but go and look at it from a low resistance liquidity run, because they're occurring all day long. They're all over the place. Inside of all this stuff here, there's low resistance liquidity runs. I mean, this high here, which is a fair value gap entry, an order flow entry drill, this high here, let me get it to pop up here. That high, 25.44 and 8 pipettes. Once it trades to that high on this candle here, that's a short with a run below here and a run below these equal lows. That's a practice session. That's a drill. And if you do that over and over and over again, you condition yourself to look for these runs on liquidity. And then if you apply it to longer term time frames, man, you got everything you're looking for. 25, 30, 50 to 75, 100 pips, whatever you're looking for, you can do it in a weekly range. You can trade on both sides of the range. It doesn't matter. You'll know what you're looking for, because of the run on liquidity is the basis of what makes these markets move around. Longer term, it's interest rates, but short term, it's all volatility reaching for liquidity. That's it. That's all it is. So when you get that understood and you can see it visually in the chart, it's everything outside of the chart. The charts stop with these candles here, but the liquidity below that, that's what we focus on. The fair value inside of these imbalances, that's the other thing we work on. So external range liquidity, internal range liquidity, okay? External range liquidity, internal range liquidity. Now you're probably confused. I teach that in the mentorship if you haven't got that far, okay? But just know that there's a a balance, an ebb and flow. Okay, just like the market moves from discount to premium and premium to discount, it moves from external range to internal range to external range. It's always that move back and forth. The algorithm reaches for all those elements. And when you get the narrative understood at the time when you're looking at price, that's when your bias clicks. That's when your long-term analysis clicks, and you are dialed in. You know exactly what you're looking for. And I can't stress the importance of making that your goal. Not money, not how much you're going to earn, and not how many pips. You need to know how to anticipate and forecast price movement, because that's what this mentorship is. You're learning how to read price. You will know without me saying it that there's going to be a time when you transition because of your decision, not mine, when you go into live trading. And you'll know when that is the right time for you. And I'm not going to say anything more than that, because we don't teach live fund trading here, because I'm not licensed and regulated to do that. But I can talk all day long about a demo account and tell you what that demo account's going to do. It's up to you to decide what that means for you as a trader. And you know what I mean by that. So this is a market maker sell model. They go from a consolidation, they ramp it up, running the liquidity above this high here. The high is 25.59, and the high on this candle comes in at 25.82. So it reaches for institutional, but again, the level was the old high. So from a pip perspective, 59 and 7, so it's essentially what? 60. So 10 pips above that would be 70, 20 pips above that would be 80. And we have that level on the daily chart at 25.79 or whatever it was. And it basically calibrated to what? 80, institutional 80. Look how many times it hits 80. 1, 2, 3, 4. So you had an entire hour to get that as an upside objective and close out any longs that you would have had back from over here or over here. Okay, so a very challenging week, admittedly. This was not an easy week from a higher time frame trading standpoint. Intraday, it's business as usual. And that's why, again, I teach the scalping, because the long-term daily charts, right now, people don't know what they're doing. I don't even know what it's going to do. But inside that single daily candle, man, I can find 50, 60 pips all day long working off a 1 minute chart or a 5 minute chart. That's why it's important to learn that, because you don't need to be a higher time frame trader. You don't need to be a swing trader. You don't need to be a short-term trader. You do need to know scalping. You absolutely need to know it, because if you understand scalping, all you're doing is changing your time frame, and that changes your model of trade. Position if it's on a long-term weekly chart, swing if it's on a daily, short-term on a 4-hour chart, day trade for an hourly chart, scalping for a 15-minute chart. It's as simple as that. It's all scalable. And because of that scalability, is that even a word? If it isn't, I just made it. If you understand that benefit of being able to scale your understanding of price in fractals, you can go into any time frame and trade it. It's not forcing you to only be able to day trade or scalp. That's not what this is. And it's a very myopic opinion for people that come in on 1 month and they see I do a lot of work with that, and they think, oh, I'm not going to be a scalper, and they leave. They have cheated themselves. One of the most powerful understandings of price action, because I'm giving you the truth of what makes these markets work, how they gyrate, why do they move, when do they move, all those things. And you learn it with example after example after example. And I did an interview with a gentleman today. He's saying he's going to have it up next week. When he tweets it to me, I'll retweet it and you guys can listen to it. You pretty much listen to all this same stuff, but I kind of like beat it into him today too, because nobody seems to be interested in scalping. And to be quite honest with you, I wasn't interested in scalping when I first started trading. I was like, I don't want these little baby moves. I want to catch these big mega trades. Well, guess what? I couldn't really capture these mega trades until I learned how to do really good intraday trading. That's when all of my trading really fixed itself on precision. Because if I can trade on a 1 minute chart and a 5 minute chart, there isn't a time frame out there that I can't destroy, because it requires you to understand precise trading entry points and exit points and management. Because if you can do it on a 1 minute chart where it supposedly is noise, or it's too choppy, or there's no real storyline in those lower time frames, that's bogus. Okay, that's coming from the mouths of the ignorant. We do this every single day here. And the reason why is it is a beautiful instrument for practice for you. Now, I've been doing this for 27 years, and I know you get tired of hearing me saying it, but there's always new people coming in, and they need to know this. I still practice every single day. Every single day. Now, if the setup is really good and it's just juicy and I just know it's solid, then I'm going to actually put money into it. But if I'm just practicing, I'm in there with a demo account just like I tell you to do, because it keeps me honed in and dialed in on price. If I did not do this every single day, I wouldn't be able to talk to you when I'm talking to you on your Wednesday or your weekend review like this one here. When there is a clear bias, I wouldn't know what that is, because I wouldn't be dialed in. Because I'm staying close to the market. I got my finger on its pulse. I know what it's trying to do, because I'm always engaging every single day. And every time I do an exercise, it's pulling more information, just like it's going to pull more information for you out of the marketplace. And it's going to frame ideas that you don't really necessarily understand what they are right now, but it'll build a narrative, and you'll know, oh yeah, I can see that happening. That's what happens by experience. I cannot teach that part of it. No one can teach that part of it. And it sounds like, oh, you're just blowing smoke up my rear end with that ICT. There's a teacher out there that's going to teach that. No, it's not. It's experience. Practicing, lifting the weight builds the muscle. I can tell you to lift the weight up, and I can tell you how many repetitions and how many times a week to do it. But unless you do it, nothing's going to change. You're not going to get any stronger. You're not going to get any more fit. You're just going to stay the same. So you need to be in here practicing, and it doesn't have to be you at work over your phone cheating your boss out of money. You can go back and look at it from hindsight, okay, and see it every single day. Annotate your charts, even though they've completed and traded. That's what I did. I did that very thing. I was working. I was doing a job. And then I was doing a job and a part-time job. And I would still look at hourly charts. And that would help me see how many opportunities there was in a week. And then I realized on a 15-minute time frame, there's even more. And then on a 5-minute chart, it's even more than that. So trust me when I tell you, there's going to be a lot of times through this mentorship that you're going to feel like you're lost. It's going to feel like you don't know what you're doing. And guess what? I'm at that moment right now looking at the charts. Your mentor, I don't know what's going to happen yet. So we have to wait. You sit still and you let the market tell you. And what does that mean? It's going to do certain things that you've seen so many times before that promotes a setup or promotes a bias or builds a narrative that I don't have right now outside of what I already gave you on the higher time frames. Okay. So with that, I'm going to segue into a little bit of a narration, if you will, of the trades I shared on Twitter today. Just one set of them, the most recent one. And kind of like give you an idea of what it's like to build large positions, pyramiding up. It's part of the mentorship here. You learn how to do that. It's not to learn how to over leverage and over trade, but there's going to be times when you want to build in a large position, but you don't want to put your large position on initially. And you want to see the market provide more clues and evidence that it's moving in your favor. And every time it gives you a new sell scenario or buy scenario, what would it look like and how do you engage? I want you to pay attention to how precise the entry points are. Okay, how much drawdown occurs from my point of entry, how much time it spends after I enter, and then where it draws to. Okay, I'm going to try to do this a couple times each week. Now, I'm not going to promise that I'm going to have 5 of them, okay, each day. And I asked of that on Twitter if you guys would like that in the mentorship and in the free members. Obviously, they're all raising their hand, but it's a lot of work. Okay, it's a lot of work to be babysitting these charts and providing that much of a service, to be honest with you. It's too much. It's really, really too much. So I'll try to provide one each time we do a review. So at best, you'll have 2 of them each week, one for Wednesday and then one for the weekend review. And I hope that satisfies, because really, as the low threshold objective, you all should be confident in knowing that you can make 25 to 30 pips a week and double your equity every single year. Now, I believe personally that you learn how to do that in month 1, but some of you require more convincing. And that's why we have 12 months. Watching me do this every single week, it builds confidence in the fact that if I can tell you what's going to happen, and we have a 90% plus likelihood in our track record of calling the markets, if we see that on a week by week basis, it is to constantly remind you that even if you can't do it right now, I'm here every single week and I'm pointing the way. Okay, so you should have no problem finding your 30 pips. When you transition into your own live trading, there's going to be times where, just like right now, I don't know what I'm doing next week yet. I don't know. So I have to wait on more information. And when that data is provided to me by way of market price, you too will know when to engage. But the benefits of being in this community is it's always ongoing. It's not like you pay 12 months and, okay, see you later. Good luck with what you got. I'm weekly explaining how to put this stuff together. And certain conditions are going to require me to reach for tools and concepts that are going to be more favored based on the present conditions in the marketplace, and maybe not talk about other things. And the infancy that you are experiencing right now as the developing trader is you want me to talk about tools that are not really relevant right now. And if I'm talking about it and the things I'm speaking on, I really want you to focus on that and try not to skip ahead or skip to other topics to satisfy this desire for your, you want to know, you have to know. I'm telling you what you need to be focusing on every time we talk. Every time that I'm on a video with you, I'm telling you the very things that you need to be focused on, the markets that you're supposed to be focusing on. And again, a lot of you are still doing other things and other pairs and other markets. Okay, I understand I introduced the gold model, but guess what? That's not a gold model. It's the New York session model. Okay, so don't think it's just gold. Okay, it's every pair. And since we predominantly follow the euro dollar and the pound dollar in this mentorship because of time management on my part, and it's what I excel at. These are my only pairs. I make a living on these 2 pairs. I don't consider any other pair that important, and sometimes they go quiet, and that's okay. I know what to do when it gets quiet. I sit still. And just like that, you need to really take in these moments and practice being patient. Because right now in your mind, you're thinking, okay, he doesn't know, so this is the perfect opportunity to hit him with emails and ask him. You might as well forget that, because I got so many emails I can't get to them. You need to practice sitting still, because if you don't develop that skill set while you're in the mentorship developing, when you do elect to trade with live funds, you're going to want to do something when it's like this. You're going to have that itch. And it ain't going to be, let's practice in a demo. You're going to be like, well, let me see what happens when I put just 5 minis on. I just want to see what happens. Well, you're going to see what happens. Regret comes. Okay? You're going to regret it. Don't move quickly when you're trying to make money. Move slowly. Move quickly when you're trying to preserve it or keep it in your pocket. So with that, let's go into our trade examples, and I wish you guys a good weekend. Be careful, be safe, and I'll talk to you guys on Monday by way of Twitter. All right, so we're looking at the British pound. This is a 1-minute chart, and I'm waiting for the bearish order block that's indicated here with the red arrow, and I'm trading up into that SIBI, sell side imbalance, buy side inefficiency, and I'm going to be targeting the liquidity below the most recent low here. a small little volume imbalance in here. Expecting that to fill. Then an expansion on the upside. So there's a volume imbalance and trades back into the bullish order block. Now the market should expand higher and reaching up into that bearish order block. Now remind yourself this. This is a 1 minute chart. Okay, so 1 minute chart, and I'm annotating where the liquidity pool is below these relative equal lows. Here, that's what I'm going to be targeting. Now, again, I don't know if I'm going to get filled yet. The order is going to be placed on a limit basis to sell. So I'm going to require price to come to me. I'm not chasing price. I'm not looking for the reaction and going in after it. I'm anticipating. I'm setting up the sell limit order. And I'm looking at this swing low here. And I'm thinking to myself, if I get a swing below that, how many pips can this go? And I'm looking for about 10 pips below that. And that's going to take me also to a very close area to these double lows here, or equal lows. So you know what's resting below that. It's liquidity as well. So the market's still holding at that bullish order block. And I want to see range expansion on the upside. And it's very important if you're on a 1 minute chart, try not to worry about how many candles are forming, because the interval is so short, it can very easily skew the information you're looking at on the chart. So what I'm looking at is the total range of a cluster of 1 minute candles. It's not so much I'm watching the individual candles. There is a storyline in that, but it has to be drawn from the overall context of what dealing range they're presently operating in. So that little short-term high, it's going to give way, and price will expand above that and slam into that bearish order block, again annotated by the red down arrow. And I'm going to try to put this into a pyramid. And all I'm going to be doing is building a very large position inside of a fractal, which is essentially what I was doing to blow up the account I showed on Twitter. And blow up meaning exponentially increase the equity. Okay, so I want to see speed here. I want to see it really drive aggressively up into that bearish order block. Now, retail's going to see this and chase it. They'll buy it. I'm not thinking that. You can see the limit order was there waiting for me. So right here's the framework. This is as close as you're going to get to being over my shoulder, watching me as I'm thinking about it. Everything's in the chart right now. The area at which I want to sell short at, where my stop is going to be at once it's filled, and what I'm targeting. So the initial sell side liquidity pool marked by that X, that's what I'm at the moment, at this moment in the recording, I'm thinking I'm going to take 50% off there and leave the remaining 50% at the lower low. But because I'm considering pyramiding it, basically building in a larger position, I'm not going to elect to do that 50%. I want to try to take a full pull at the lower liquidity pool. That means I'm going to build positions in as every PD array or premium array is offered to me. I'm going to build in a new short position. So the first initial position was 10 lots, and now I added another 8 lots. Now I'm seeing a SIBI, sell side imbalance, buy side inefficiency, and I'm also noting the breaker here. Now if price were to come back up, I would try to sell short
at the bottom of the most recent the most recent up close. In other words, now 2 candles back. But I'm annotating the breaker. If I can get to the top of the breaker that's highlighted here in blue, I'm going to sell short another portion, which will be 2 lots less than the previous. So you can see I started with 10 lots, then I dropped to 8 lots on my secondary entry. Now my next entry is going to be 6 lots. When I first started trading, I was taught the pyramid with 1 contract or position, and then 2, and then 4, then 8, then 16, which is ridiculous. You can't sustain that. A little bit of movement against you, and you're dead. So now I have 10 lots, 8 lots, and 6 lots with the expectation it's going to reach down into those equal lows, which is now the only highlighted liquidity pool that I'm targeting. Now we're spending a lot of time in the breaker, so I'm thinking I'm going to add another 4. And I'm going to use the market order here. I'm not going to be able to use a limit order because I'm still inside the range that defines the bearish breaker. My initial entry, that run on the previous short-term high, that is the framework for the bearish breaker. So the low, the lowest down close candle, is what I'm annotating with the blue range. So I have 2 positions entered inside that breaker. And I'm going to look to do another position here. Now normally I would drop down into a 2 lot, but I'm going to use a 3 lot simply because I want more bang for my buck. And because also, if you look at how I booked the 10, 8, and 6, I'm really high up in that price structure. So it's going to afford me to do a 3 lot versus a 2 because I have a lot more equity at work higher up in the fractal. And it's a long way of saying I can afford to do a 3 lot versus a 2 lot because I have a lot more in profit than I do in the smaller positions. So I have a 3 lot on now. So I have 23 standard lots built into this fractal. And I'm going to let it ride. So as the market drops, the initial positions I was building for the cable, it actually stopped me out. You guys see, watch that in the Twitter clip that I made. And I'm not going to do that one because it's not as good as this one here, but you see it. And I show the numbers at the bottom of this recording. You'll see the entire recordings and the euro dollars result as well, because it didn't make its way into the clip. For whatever reason, I didn't have enough of the screen being zoomed in. So now I'm adjusting. I'm looking at those double lows, and I'm thinking, okay, I need to be able to cover this with the spread. So I'm adjusting my limit orders to compensate for if we just breeze right below those equal lows by a little bit, I have to make sure that my limit orders are going to be able to collapse. And right now this looks beautiful. I'm very confident. I'm thinking that, I'm getting ready to cross the finish line. I'm down the home stretch. And we start to expand. Boom. And that is always fun. So when you look at price like this and you see these are the results of just practicing. Now granted, that's a pretty sizable position for some of you, but you grow into this. It's not something you just go right into and it's immediate. It's a gradual thing. So I hope you enjoyed that.